Hi guys, welcome back to the channel, Subsistence Traveling. I'm your host Jay. Today we're talking about the disconnect between asset prices and the economy. All right, so I promised I would do one of these videos per week. Now the purpose for these videos are to share my outlook, perspective, and predictions. So here we go. All right, so we start off with a question: what drives asset prices? All right, so we all know the answer to that is liquidity. Now, sources of liquidity includes savings, credit, government initiatives, and central banks. Okay, and we see lots of liquidity being pumped in the system right now. Whether it be the extension of credit, the initiatives that the governments are taking, and the central banks are doing their thing. So, what you want to figure out, you know that money has to go somewhere. Now, it's your job to figure where is this money going to go. If you can figure that out, you can make lots of money. All right, so assets are essential. In a period like this, assets are very essential. Okay? In a stagnant slash deflationary environment, assets are essential. These are the periods, these are the reasons why you want to own assets for periods like these. Okay? Assets are essential if you are physically disabled. All right? Assets are essential if you belong to a socially marginalized group. And I'm going to speak more on this later on in the video. Well, right now, I would just recommend that people focus on valuations and returns. You want to buy the cheapest assets, okay, and that's to minimize risk. And you want to look for the highest return. And that is to compensate for taking risk, okay? You don't never want to be taking return free risk. All right? And whether that's through a good dividend or through good capital gains. Okay? And one of the things you want to also make sure you're investing in an industry that will be around in the next 10 to 20 years. Don't invest in any dying industries or anything of that sort. Look for where you believe what's going to be popping tomorrow. All right, so we're going to talk about demographics. All right, now demographics is one of the biggest causes for the disconnect between asset prices and the economy. Why is demographics so important? Okay, now we live in an age where, family values are not really important. No one wants to have children anymore and so forth. The thing is, population growth is very important to an economy. All right. And it's very important because it determines the distribution of wealth. Okay. When you have very low population growth, it allows wealth to be concentrated amongst a very small amount of people. Okay. And that once wealth is concentrated, that's pretty much control. You've given control over to a small group of people, and allowing them to control everything. Now when you had terrible demographics, okay, which is very low population growth plus a stagnant economy, it makes owning assets even more important. Okay. And because again, it's like a fight. It's a fight for control. And also it's during periods like this that asset prices shoot up. Because a stagnant economy plus terrible demographics, the wealth is concentrated in a small amongst a small amount of people. So it really has in an environment like this, The economy has nothing to do with the economy. I mean, look at what we've seen over the past few weeks, where where we have a crisis, where what, close to 10 million people filed for unemployment in the U.S. Yet the stock market went up. You know, that's one of the things. The wealth is concentrated amongst a small amount of people. Okay, and like I said, I know it's not common, but we can be in a deflationary period and see asset prices rise, especially when you're dealing with companies that produce essential goods or an essential service, or a technology that's revolutionary. You can see some stock prices just shoot up, while others just, it's plenty of things that could happen here. But demographics play a very important role, and it's very important to own assets, whether it be some stocks or something, in a period like this. All right, so we're going to talk about classism. Okay, and there's lots of classism in asset prices, and asset prices play a big role with classism. They're very important. And I know classism, people say, okay, that's a social issue, but you have to realize that economics is a social science. Okay, so what classism does, it excludes a majority of the population from owning productive assets. Okay, I truly believe that it's gonna become a time when it's gonna be very hard for the average person to own one share of stock. I really believe that's gonna happen eventually. And that's one of the reasons why you can see rise in asset prices, because it's almost like a matter of survival. People are just trying to make sure they own something. Okay, and this could happen in a declining economic environment. And the next thing that classism does is it affects social mobility regarding employment and business activities. Okay, now the truth of the matter is, there. I mean, when you're talking about the good jobs, some people are going to get the good jobs, and some people are going to get the crappy jobs. And a lot of times classism plays a major role in that. And as far as opening up a business, when you're, especially in the Western developed nations, it's very difficult for the average person to open up a business. Most of the businesses are being opened by wealthy people, and that kind of classism, because the more regulations that they put, after this crisis, you're going to see them come with more regulations. And who do you think that affects? That affects the lower and the middle class, preventing you from having, certain business opportunities, or, certain employment opportunities. Okay. So, and that makes it even more important for you to own some kind of asset, whether it be some stocks, some bonds, some real estate, some metals, or something. It's very important to own assets in a period like this. Here's some facts to consider. Western Europe has been stagnant for the past decade, yet the stock 600 index returned almost 200%. Okay? The Venezuelan stock market returned over 2,000% over the past year. Okay, so these two examples, I'm just showing you that the economy and asset prices have nothing to do with each other. Okay? The main drivers of asset prices are liquidity, is the main thing that drives asset prices. Liquidity. Classism, like I said, it plays a major role. Demographics play a major role. Okay, and that's something you have to, if you don't get anything from this video, remember the role that classism and demographics play regarding asset prices. Here's my final thought. Try to identify where money will go. Invest small amounts. And I say this because in a period of very low interest rates, it forces people to invest more and more just to get a decent return, if any at all. Okay, you want to make sure, and that ends up being a losing thing, because you're investing more money, but the more you invest is the more money you lose. So you want to make sure you invest small amounts. Okay? Stay invested to a certain degree, because over the next generation, stock prices may become unattainable for the average person. Now, I'm not telling you to put 100% of your money in stocks. No. But I'm saying stay invested to a certain degree, because the way it looks, and from me studying different markets and history, it looks like asset prices may become unattainable for the average person over the next generation. All right, so I just encourage you guys to stay tuned. I encourage you to like, share, and subscribe. And I have more videos where I share some more insight with you guys. It's a video that I have called "The New Way to Look at Stocks." I forgot what the exact name is, but I would encourage you to look at that video. As I always say, guys, peace to all.